Well, a lot of fresh information to digest today for natural gas futures. Bottom line, trading's been on its back foot most of the day. Futures back to the levels that we saw around March 25th. Right now, feeling under pressure as the Commodity Weather Group came out today, extending warmer than usual forecasts for most of the U.S. for the next 2 weeks. Combined with lower 48 demand came out today, down 9.5% on a year-on-year basis. Lastly, another report by Edison Electric, cumulative output in the U.S. on a 52-week basis, down 1.3% on a year-on-year basis. There's a lot of negatives for the market to digest, and some people are pretty impressed that the market's held up as well as it has. On the other hand, it seems like the losses feel a little bit limited, bolstered by some good news that came out today, or at least bullish news. Flows to export terminals once again up, actually up 22% on a year-on-year basis, according to BNEF. Production in the lower 48 for dry gas, that came out, a Bloomberg report, down almost 2%, down 1.7 year over year. And lastly, there was that carryover with last week's EIA report. And again, we have it tomorrow, but inventories last week were reported to be at 1 3/4 year low. So a lot to digest. And with that said, you need to look at the CVOL from the CME Group's website. You look at the options volatility, the overall curve is low on a 1 week basis all the way out to a 1 year basis. Relative low volatility. That said, down variance and up variance, down strikes and up strikes are both down, although the up strikes are down more. That's causing skew to go lower. Believe it or not, at the money vol, May and June up slightly today, just modestly. Option volatility a little bit below average today. Did see some trading in May, 280 calls and 240 puts. Some people think that that was a strangle that had been sold. Also in June, 250 puts. Also saw a strangle trade, 245 put, 290 call.